And for more on China's banking sector, we're joined by Derek Scissors. He's the resident scholar at the American Enterprise Institute. Derek, thank you for joining us tonight.
Thanks for having me.
So Derek, as Kathy just reported, the president of Minsheng, which is China's largest privately owned bank, has resigned amid reports that he had been questioned by anti-corruption investigators. Do you think that Mao's resignation is the first of more to come? Is the financial sector now the focus of the anti-corruption campaign?
I don't know that it would be the focus because there's a lot going on in other sectors still, but I do think this is a warning to the financial sector that you're now under the spotlight as well. Before, we've been paying attention to other sectors like energy. Maybe you thought it wasn't your turn or you were going to be excluded, but that isn't going to be the case. So we shouldn't be surprised at more findings in the financial sector.
And what would the implications of it now being more focused on, China's watchdog more focused on the financial sector? What impact will that have on the financial sector?
Well, the short term is obviously going to be a problem. There are going to be problems in stock prices, as you have just been discussing. There are going to be problems in confidence. There may be savers who don't, both individuals and firms, who don't trust certain institutions if they're being investigated. But the financial sector has been rife with problems, and there's going to be a lot of suspicion because of those problems that there's corruption. Maybe the problems don't have to do with corruption. Maybe they're just problems. So in the long term, verifying that corruption is being reduced or eliminated is a good thing for the financial sector.
Always a good thing. All right. Well, China's banking system, Derek, is undergoing major changes. Last year, as we know, a pilot scheme was launched, which allowed 5 privately owned banks to be set up. How do you think this is all working out so far?
Well, I think the setting up private banks is the absolute best thing China can do to reform its financial system. It's better than any other steps they're taking, like interest rate liberalization. Competition is everything in banking. It's everything in most industries, and private firms are going to bring competition. So the move is great. It's just happening too slowly. There are huge state banks in China, as everyone is aware, and having one bank get a license per year that's private is going to change the industry far too slowly. So this is a great step. It's a very healthy step, but it needs to move much more quickly, either now or perhaps, if there more confidence is built up by the regulators, in 2016 and 2017.
All right. Well, Derek, one of those banks is WeBank, which was launched in January by Tencent. Tencent and Alibaba among the 10 private investors that were approved by the government. Now, Tencent launched in January the first private online bank in China. So how do you see the internet banks now stepping in and changing the banking sector?
Well, that should be the wave of the future. China has moved online in a huge way in the last 10 years, including in retailing, buying goods online, and so on. So banking should come next. And I think it's a big advantage for the private banks, both that they're already in the internet, whereas some of the older state banks are not, and also that people are going to be more willing to use new banks like internet banks. So I think this is a time of innovation for the financial industry. That's what should happen. I think it will be helpful for China to have this innovation. And in particular, I would think private banks would be more agile, more flexible, better able to take advantage of internet banking than the state banks will.
Derek, isn't that a tough area to regulate, especially the internet banking? Who's going to make sure that everything's on the up and up?
That's a very good point. It is a very tough area to regulate. On the other hand, the current financial system in China is a very tough area to regulate. You have trusts, you have local government financial vehicles, you have all this talk about shadow financing moving from one spot to another. So I don't think this makes it any worse. And I think actually turning most of the records into computer records might ultimately help transparency. That's not to say it's going to be easy, the transition's going to be easy, but I think the current system is so difficult as it is that I don't think banking regulators are thinking the internet is the problem. I think they're thinking they have a lot of problems already.
All right, a lot of problems, and you say that more privatization is the solution, but that it is just happening too slowly. So what other reforms do you think can be expected this year? Do you think that there will be more licenses issued or any other big steps?
There'll probably be steps announced. I mean, the two big steps are more competitors in domestic banking, so it's not just dominated by the state, and private banking licenses are a help that way, and then allowing money to flow more freely out of China. And both of those increase competitive pressure. So I understand why the government at the highest levels is very cautious about this. But that's ultimately what's going to fix the issue. A lot of bad loans have been made in China, a lot of debt has been created, and the way you stop bad lending is to increase competitive pressure. So we're moving in that direction, but the government's been very slow. I think we might get one more private banking license this year, maybe two, which would only bring us to 4 or 5 private banks. We won't get money being able to freely leave. So we're going in the right direction, but I don't expect anything dramatic in 2015.
All right, but going in the right direction. Derek, thank you so much. Derek Scissors, resident scholar at the American Enterprise Institute.